How to record a journal entry the easy way. Welcome to another video, guys. My name is Bill Hanna and this is the Financial Controller channel where I teach you tips and tricks to supercharge your accounting career. I've been in the accounting game for over 15 years. I started out as an auditor, then I went to become a staff accountant, senior, and then manager, and then now a controller. And the whole purpose of this channel is to give you the summary and the juice of my experience over the last 15 years so that you can apply it to your own career and learn from it. So today we're talking about how to record a journal entry, and journal entries are the building blocks of the financial statements. As we all know, business transactions get recorded in the form of debits and credits as a journal entry. That will go to a trial balance, the purpose of which is to make sure that all of our debits and credits are equal, and then from a trial balance we can summarize that into a financial statement, which is the balance sheet, the income statement, and the statement of cash flow. And in this video I'm going to show you the easiest way, the simplest way to think through any journal entry and never forget your debits and credits. And we'll begin by looking at why we need debits and credits or journal entries in the first place. If we really understand on a deep level why we need them, we will truly never forget the method of how to record them. So we'll look at why, and then we'll look at 3 easy steps to record any journal entry. If you follow these steps, you can think your way through any journal entry or business transaction. And then we'll look at 2 real-life examples so that we can practice what we learned today. And so let's dive right in. So first, let's look into why we need journal entries in the first place, because we didn't always have them. Before the 15th century, people recorded business transactions in terms of cash. So in the past, before we invented debits and credits, cash went up and cash went down, and that was really the only way to look at a performance of a business, is looking at how much cash it has. But then in the 15th century, and particularly in Italy, in Venice, with the increase in commerce and all of these Venetian merchants creating new types of businesses and trades, increase in commerce forced some of the folks at that time, and there was a priest by the name of Luca Pacioli or Lucia Pacioli, who was a very cool priest at the time, who invented the concept of debits and credits. And also because we had the concept of investors. So people began to invest in other people's businesses. And so when you have an investor, you're now having someone who wants to know how is the business doing aside from cash. So an investor wants to know what kind of expenses you have, what types of income streams you have. And so an investor is concerned with much more than cash going up or down. And so that made Lucia Pacioli, that priest we talked about, invent the concept of debit and credit. And so the idea of debit and credit was the economic benefit, meaning the increase of economic benefit in one place in the business and a decrease in another place. An example of that would be if you buy inventory, your inventory economic benefit will go up, so that will be debit, and then credit will be to cash because you had to pay for it in cash. And so it's kind of, we have to record one side by debit, one side by credit to represent the change in economic benefit in the business. And that was, as opposed to before, it was only in cash going up and cash going down. Now with debit and credit, we can record the inventory impact and the cash impact. And that was the idea that Lucia Pacioli came with in the 15th century, and it stayed with us until today, and we practice it in the current time. My first step in recording any journal entry comes from the energy law that every action has an equal and opposite reaction. And so for every business transaction, and the example that I have here is a computer purchase, whenever you have any action in the business, there's a reaction. So as long as you can think of it as an action and reaction, this is the first step for you to record any journal entry. The example here, if you buy a computer, then the action will be that you bought a computer that will increase your fixed asset, in this case a computer, and will decrease your cash. So it's action and reaction, and as long as you can think of it this way, this is your first step in never forgetting how to record a journal entry. Now the second step for us to remember how to record our journal entries is remembering this chart here. If we always remember this acronym DEALER, D-E-A-L-E-R, dividends, expenses, assets, liabilities, equities, revenue, DEALER, an easy word to remember. As long as you can have this handy whenever you're recording a journal entry, you'll always remember what goes in the debit side and what goes in the credit side. And now let's look at our first example so we can practice everything we talked about today. The example here goes that we are buying office supplies for $100. And let's use here our chart that we learned today to record this business transaction. If we have office supplies that we're buying for $100, and remember we said that journal entries will be action and reaction. The action here is that we are buying office supplies, we are increasing the office supplies. What is the reaction to that? The reaction to that is a reduction to cash, right? So if you buy office supplies, that means it went up and your cash will go down. So to record that, you have the assets here. They always have a debit nature. Office supplies is an asset. And the way to know whether anything is an asset or not, or an expense, in this case, office supplies as an asset, the definition of an asset is that it's a purchase that will have a future economic benefit. Are you going to have a future economic benefit from office supplies? I think the answer is yes. When you get office supplies, you keep it at the office and you use it in the future. And so office supplies is an asset. That means we have to debit this asset, office supplies, because it has a debit nature here in this chart. So debit to office supplies for 100, and credit to, in this case, we remember action, reaction. The action, office supplies went up, cash went down, and cash is an asset. If you want to decrease this asset, what do you do to it? If an asset has a debit nature, what do you do to it to make it go down? You credit that asset. So credit to cash for $100. And this is super easy, guys. Like, always remember your acronym here, dealer. If you remember that, and what has a debit nature in dealer, what has a credit nature, and remember that there's an action and reaction to every business transaction, you can think your way through any journal entry. And now let's talk about the second example. Okay, so in example number 2, we paid salary for $1,000. And whenever we spend any cash, whenever we pay any cash out of the business, we either are making an expense, incurring an expense, or buying an asset. In this case, if you want to think your way through it, if you are spending on salary, is this an asset? Well, the answer to that, an asset will be an expenditure today that has a future economic benefit. And spending on a salary doesn't necessarily have a future economic benefit. You're paying for something that happened today. An employee performed the service today, and you're paying him the salary. So this is an expense. So an expense, to record this transaction here on the debit side, to increase an expense, it has a debit nature. So here that would be debit to salary expense for $1,000. And the credit in this case will be, you obviously are spending the salary in cash, and so a cash is also an asset that will go down. And since assets also have a debit nature, to decrease them, you have to credit them, so credit to cash. So as you can see, guys, it's super simple. If you can always remember your acronym dealer and you can think your way through any journal entry, remember action equal reaction, that's opposite in direction, and your acronym dealer here, you can think your way through any journal entry. And my third step in recording any journal entry is to think through it. And what I mean here is that it's okay for you to think through it. I've been in accounting for 15 years, and until today, I'm presented with business transactions that I need to think through the journal entry. So it's okay for you not to remember every single journal entry and scenario to record a journal entry. It's important for you to know that you can think through it and you can look it up online, Google it, find the answer. You don't have to know all the answers immediately on the spot. If you're talking to someone about a business transaction and how to record it, or in a job interview, it's okay for you to get a pen and paper and draw it out and just look at it, visualize it, think through it. And this is my third step in recording any journal entry. If you enjoyed this video and you like something new, please give a thumbs up and share this video with someone else that might benefit from it. And don't forget to subscribe to our channel and hit the notification bell so that you don't miss out on any of the videos that I put out weekly. And I'll see you in the next video.